Hello traders, welcome to another video from this beautiful channel. So today I'll be talking about futures trading. I've been getting so many requests, do a video on futures trading, what is it all about and everything we need to know. So today this video is for you, and as you know, I love using Bybit. So I'll be doing today's video with Bybit. If you're not yet on Bybit, I'll drop a link in the description below for you to join ASAP. So for the sake of this video, we'll be making use of demo trading. So I'll just have to click on this demo trading here, and then I've activated it. Now, in the world of trading, there are two major activities that are going on centralized exchanges. We have the spot trading, and then we have the derivative of futures. Spot trading, you're simply buying at the spot. At that spot, you're buying all these contracts. All these stuffs here are called contracts. This BTC, USDT, Ethereum, USDT, they are all called contracts. Whereas futures trading, you're trying to predict what this particular contract will get to, and then you buy or sell there. That is, you're trying to buy or sell at a particular price. So let me click on derivatives so that you see what I mean. When you click on derivative, there's a difference here. There's a slight difference here in the prices. You get, that's to tell you that the derivative market and the spot market, they are not really the same thing. This one has to do with you buying at the spot, whereas this one has to do with you buying at a predicted price or selling at a predicted price. So let me click one of these contracts here. We're making use of Fatcoin USDT. So welcome to this interface. This is where you have to pay attention, close attention. So the first thing I want you to know are the languages that covers the whole futures trading of a thing. You've been hearing of TP, SL, leverage, margins, and so on and so forth. So I will explain that to you. Let me click on trade. This is charts. This is where you see the pictorial representations of the buying and selling activities of every person that is trading this coin right now, Fatcoin. So let me click on trade. As you can see, it gives you this interface. So the first thing here, if you look closely, you would see cross, isolated, and portfolio. Now, these are called margins. Let me explain. Pay attention. The first thing you need to know is this isolated here means that if I should enter a particular trade with, let's say, $100, and now for some reason I get liquidated means the trade goes against my prediction, and then I lose. I would only lose that $100 that I entered this trade with. But if I should switch from isolated to cross, I will not just lose that $100, but I will lose everything, every USDT that is available on this Bybit account. I don't know if you grabbed. Let's say I entered this Fatcoin USDT that the price will get to 1.5, that the price will get to 1.53 in the next 4 hours. And now for some reason the price went down to 1.51 or 1.50 now. And then if I had entered with $100 for the isolated, I will lose that whole $100. But if I should enter, or if I had entered with cross margin, I will not just lose that $100, I will lose any available USDT on this home page. I will lose every available USDT on this home page. With that being said, let's go over to leverage. Now, what is leverage? Leverage, as you can see here, we have 1x, 2x, 3x, 5x, 10x, 25x, 75x till 100x, and you can even go ahead to customize the kind of leverage you want. What is that? Now, leverage is you multiplying these numbers here with the actual capital you want to trade with. Let's say I want to trade Fatcoin at a 10x leverage with $100. What I will simply do is I would come to this USDT place. Instead of putting that $100 here, I would do that $100 times the leverage I would put in it with. So it will now give me 1000 USDT. As you can see, it's showing I'll put 1000 USDT here. That is the $100 I want to trade with times this leverage here, which is 10x. And now if you want to see the actual money you're trading with, you look beneath here, this quantity cost. You can see this cost here. You are seeing $100, 100 USDT here. That is the actual amount you're trading with. But the other value has to be your capital times whatever leverage you choose. If I should choose 5x, what will now be here won't be $1000 again. What will now be here will now be $500, because my $100 times my 5x will give you 500 USDT. But initially what you are trading with is $100. Now, why do we do this? Why do we leverage on the market? We leverage to gain more. And then leverage comes with its risk as well. It has a lot of risks if the trade goes against you. So for most persons, they like to use higher leverages like 75x and everything. If the market should go against your predictions, you immediately lose all your cash. That is if you're using the isolated. But if you're using the cross margin, every USDT in this account would go. So with that being said, we move to the next part of this place now. Now, you may want to execute a trade at a particular price, not the market price. Like I used this chart now. Let's say I want to buy or sell, which is called long. Buying is called long, while selling is called short. And in this chart here, every green candle you see is a buying activity. Every red candle you see is called a selling activity. All these stuffs here is just showing you the pictorial representation of a buyer and a seller. So let's say I want to buy Fatcoin under futures contract when the price gets to 1.178. Now I will set a limit order. Should this candle should get to this place, this 1.1781, it will execute it for me. So that is where this place comes in. This market column here, you can see you can put it in limit. Now I will now have to put in the price I want it to get to 0.1718, so that when Fatcoin gets to that part or this price, it executes the order for me. And now as for the USDT value, if I want to trade this particular trade with $100, I will still use that $100 to times by the leverage I want to use. Mind you, leverage can be very risky as well and very profitable too. So I'll put in my $500, and now I will go ahead. The next thing I'll go ahead to do now is my take profits and SL. Every other thing here, this market means you are trading at the market price. This conditional means you're waiting for some set of conditions to be met. And every other thing here, I love using limit or market orders or conditionals, but every other thing here, I don't really use much of them. But for the three things you need to know, I just limit, market and conditional. So let's move over to the next part, which is the take profit or SL. If you can see this TP slide SL here, TP means take profit, SL means stop loss. Now TP means when this price, let's say I created a buy order or a long order from here, from this particular place now, 1.5251, and now I decide to set my TP at 1.64. Now what it will do is, whenever price gets to here, the trade automatically closes based on the take profit and based on the percentage I want it to take profit of. I will do all these things practical, so just stick around. Now the next thing is SL. SL means stop loss. So if the trade should go against me and then it's not going in my favor again, I can decide to set a stop loss here, that whenever price gets to 1.3931, please close this trade for me. I've lost enough, so close it for me. That is what it means. So guys, now let me do a practical stuff. Let me do a practical trading, so stick around. So I would love to use BTC for these practicals. So BTC is currently at 11854. 11854. So I can decide to short BTC, that is sell BTC, that it will come to 113, this particular place. So now my TP automatically becomes 113118. And now my stop loss, I can decide to sell or to close my trade at this point, 119994, so that if the trade should go against me and then hit this 119994, it automatically closes for me. I don't want to trade again. And now I'll do this using a leverage of 10x. Remember, I told you guys that leverage is important, and then you have to be risk cautious of that. If the trade should go against me in a 10x leverage on an isolated margin, I would not really lose much. But if I should use 100x leverage and then it goes against me, I may end up blowing my account. So let me click on trade, and now I want to execute this trade on the market price, the current market price. So let me change this to 10x and then change this cross margin to isolated. I want to properly manage this account, so I want to do this using $1,000. So instead of putting $1,000 here, I'll put $10,000. That is the 1,000 times 10, which will now give me the $10,000 here. But the real cost is $1,000, which is shown beneath this quantity. So our SL, I'll just click here, take profit for me around 113118, and now stop loss when it gets to 119994. Now, so guys, if you can see something, I'm making $477, but I'm risking $102 to make $475. So I'll go ahead and click on short. Remember, I want this trade to go down, that I want BTC to sell, so I'll click on short, then I'll click on confirm. Now, as you can see, the trade is at a point of indecision. It's already going. I'm already making money, guys. I just made $2 from this. So you may have seen some persons post this stuff. You can just click here and then you can go ahead and advertise your profit and everything. And then if I want to stop this trade by myself, let's say I'm already, I've made some money that I want to close, I can decide to just click on close buy. And then if I want to close everything, I'll just click on 100%. It's already there, so I'll just click on confirm. So guys, I've successfully closed this trade. You get, the trade is still going well, but let me re-enter though. Let me just check out something. Let me take profit at 113118 and 119994 shorts. So guys, see you in the next video. Make sure to like and subscribe.